We would love to wish you a happy new year from everyone at 50 Faces Productions. While we are busy curating Series 1 of 2026, we'd like to bring you some thoughts that we gathered over the course of the Christmas and New Year break. It was great to sit down with a friend of mine and previous guest on the podcast, Ian McKnight, for his inaugural podcast called The Long and Short of It. In it, we engage in our typical banter. We speak about everything from recent political developments on the geopolitical stage, as well as to our thoughts on markets. We discuss a little bit of what's going on in our lives, and we discuss what our thoughts are in terms of the investment mindset and investor mindset as we head into 2026. I hope you enjoy this inaugural episode of Ian's podcast, and we look forward to coming to you both weekly with the Markets Happy Hour podcast, as well as weekly with our 50 Faces interviews very soon. Happy New Year, everyone.
Hello and welcome to The Long and Short of It, an occasional podcast where we bring you economic, market and investment commentary with a bit of real life and good humour thrown in. I'm Ian McKnight, a Senior Advisor at Cartwright's, Giant Shoulders, Hineni and CIO Tontine Trust, FinTech. And I'm joined by Aoifinn Devitt, absolute legend of the industry, Senior Investment Advisor at Moneta and several pension schemes to boot. The host, you'll know, of the 40 Faces and Markets Happy Hour podcast. Welcome, Aoifinn, and Happy New Year.
Happy New Year to you too, Ian. Great to chat with you here.
It's very exciting indeed. So where do we start? Right, we want to give listeners to this podcast a bit of our thoughts on the whole craziness that's just been going on, and we've so much material. We'll have to be parsimonious in what we say, won't we?
Exactly. Well, it's been a crazy Christmas period. I hope you had a good time. I was relaxing in France, but with an inundation of news flow, it seemed there was a lot to get through in terms of rethinking the new order of the world and politics, finances, economics, and there was barely time to make many New Year's resolutions.
Well, how about we have a little chew over some of the Christmas festive news flow, which frankly was just non-stop, and then have a little look forward to the next year or two and see what we think about that. So maybe if we start, I guess, with something we brought up in a chat we had on one of your podcasts before Christmas about the Venezuela situation and the impact on the oil markets, but also the knock-on to precious metals, both of which have been big stories financially over the last week or two.
But no, and you actually called this, I think, in our last discussion. Well, I was finishing out the year of 2026, looking at this phenomenal resilience from the US economy. And I'd seen the term that 2025 was a defining year for metals. And that was something I was running with on Christmas Eve as I was preparing my kind of Christmas podcast. Didn't do Christmas Day, but the day after Christmas, Boxing Day. And then no sooner was I then looking at the notes to prepare my New Year's Eve podcast. The defining year for metals had taken another turn because we'd seen some pretty sharp volatility in the silver market and an alteration of some of the margin requirements by the CME and very sharp falls in silver and some rumors circulating, which have completely gone to bed at the moment, that one large financial institution had been caught with these rising margin requirements.
Ooh.
So it was the specter of another kind of whale trade or something capturing a large, too big to fail bank in its wake. And again, the perils of leverage. So it was a real kind of blast from the past, that particular week, I think, in terms of just what we were seeing in terms of silver. That was one theme. And then in terms of what else, the AI, geopolitics, I think we now know from Venezuelan news, geopolitics still does not really move markets. I think the Venezuela as an oil producer, what is it, number 18? Seriously dilapidated and under capacity infrastructure, and as well as its impact on world GDP, no better than minuscule. So certainly it's clouding our social media feeds and the headlines, but in terms of its impact on the economy, I, at this point, am guided towards thinking it'll be very minimal in terms of its impact on markets.
But that's a very good point. So we've seen this for the past few invasions, wars and crises. The markets tend to just take them in their stride. And it's a very modern phenomenon to not have a massive panic when things like this happen. What are your thoughts on why that might be?
I do think that it's really history has taught us that these geopolitical events tend to be flash in the pan as far as markets are concerned. There could also be the inability, maybe, to potentially extrapolate from a very large, almost abstract event into tangible kitchen table issues that drive stocks. That could be just a disconnect where we can't process it. So we therefore don't process it and we just focus on what we can process, which are backward looking earning statements. That could be one reason for that particular disconnect. It could be that markets are just so resilient today that they run on their own steam and they don't need to take into account geopolitical events. But it is a great question as to why this is occurring. And it does seem that, looking back over the last 18 months or even longer, that has seemed to be the mood that geopolitical events can dictate headlines. They can certainly hint at a shifting world order, but that shifting world order, even tariffs as they relate to the world order, do not tend to impact markets that much day to day.
So you've touched on tariffs there, which is relevant to the US. What are your thoughts around that? Because I've got some thoughts on what might happen there.
Well, it's interesting. You mentioned what maybe some of the heuristics that maybe come into place as to why geopolitics aren't affecting markets. And one of the other, I think, trends and behavioral biases I'm seeing is a tendency to believe that causation is instant, maybe unilateral, in terms of that, for example, interest rates being dropped will instantly lead to a flood of new credit and drive up inflation, or the opposite. In effect, this more stringent monetary policy, more restrictive policy would lead to lower inflation. Equally, there was the expectation that tariffs would immediately lead to higher inflation, not taking into effect many of the intervening factors that can get in the way of a very strict causation. And I think we are also assuming, perhaps as markets open today, we're recording this on January 5th, Monday, that there will be an immediate effect on the oil price from the Venezuelan affairs, as well as perhaps a short trade around Canada. And these effects are not immediate. So I'm not sure whether this is, again, a cognitive bias that investors assume that causation is straight line, single cause, and also immediate. So I don't think these things are immediate. I think that's one of the things that we do need to factor in.
Because it always strikes me, so in the bond markets, for example, even when things are well heralded, they often wait until it's actually happened before moving. Whereas I think what seems to happen now in other areas is there's so much news constantly that, as you say, identifying genuine cause effect, this is a nightmare for economics professors, right? When they're teaching their classes, what should happen and what does happen. And in the past, as we've seen, sometimes it's a complete opposite. But it's a muddied somewhere in the middle of theory versus actuality. And this cause and effect thing in for example, the stock market, we're looking at massive multiples, which we'll come back to in a minute, I think, because that's particularly interesting. And you've got a delay in realization of what's actually going on. But fundamentally, to me, and back to this commodities complex, isn't it all fundamentally cost of energy and raw materials that should be the inflationary factor? Because you've got the rate situation is just got a mind of its own now, and the central banks have different remits than they used to, and they're also arguably pretty politicized. They're not as independent as they might want to pretend.
It's a great point, and I think yes, our assumption that an easy monetary environment would drive inflation is usually based on these demand factors, and in effect, much of the inflation around COVID was supply side driven, and certainly on the energy side, with oil being suppressed as it has been, or at least the price coming down, and it's still down about 20% on the year, on the full year, trading in the 50s, that would be a conducive environment to having lower, at least, energy prices at the pump, at least as far as that big sticker, the price of a gallon of gas that the President Trump seems to focus on. Whereas we do know, though, that electricity is rising in price, particularly in the UK. We know that it's taking an increasingly large share of that inflation budget. And that is something that's causing a lot of sensitivity to communities in the US that are concerned about data centers essentially devouring their energy allocation and driving prices higher, as well as just the affordability point more generally. So I think that and I found a very interesting stat at the end of the year that the clean energy index was up over 40% over the course of 2025. And this is against a backdrop of, I think, incontrovertible headwinds from the Trump administration.
Yeah, but isn't this just a global phenomenon where governments are just hose piping money? This it's basically a subsidised industry to a degree, and you're either being political, so it's all linked. This confluence of politics and economics, because standalone, I can't see that they've ever got off the ground. These offshore wind farms and so on.
But I think it does illustrate this 40% rise. And there was an interesting article in Bloomberg that was shorting regular oil and long the clean energy index, and that would have generated 80%, according to John Other's Hindsight Capital, which is, of course, a backward looking artificial construct. But at the same time, I think this does illustrate that the demand for energy, and this gets back to your AI point, that is only heading in one direction. So if we can,
Yeah, so this is great for it. Sorry to interrupt you, but it's like the oil majors are probably quite interesting at the minute, and this whole Venezuela thing, which fundamentally, whether it's caused by or it's just a nice corollary of what they've done, is to keep the oil flowing in, this heavy oil they've got that's nicely refined on the south coast of the US. Of course it is.
This is a very interesting time for oil majors. On the one hand, they seem to be getting the promise, a very vague promise, I'd say. It's been a little
Mm.
difficult there is always this guardrail against whether we should take President Trump literally or seriously or both. And I think taking him literally with some of the statements around Venezuela would be a little misleading because some of them simply have been contradicted the next day or simply will be difficult to imagine, for example, running the country from the US. But what has been quite clear in the rhetoric has been this statement around reclaiming stolen oil or regaining rights to oil. I think that has been a narrative that has been front and center of the recent developments, and a suggestion that the US and maybe even multinational oil majors would be involved in essentially reclaiming some of that oil and certainly getting a right to develop it. That is another point of cause and effect, though, and certainly in terms of timescale, because it's by all accounts, this could be something that would be 10 years in the developing, this under invested in oil infrastructure within Venezuela. And it would certainly not be a plain sailing situation given the fractious economic situation.
It's a decent strategic shift, and not least with the Russia and China influence over there. And I heard there's like Hezbollah presence and Cuba's interference, and potentially Cuba, they've got their eye on them now as well. So, but Donald Trump to me always he's like a bloke in a pub, isn't he? Who's had somebody tell him in probably reasonable detail what they're doing, why, how he should present it, but what it really means. And he just blurts out things he shouldn't blurt out. So, and it's quite amusing to watch. The first time I noticed this was when he talked about, injecting yourself with bleach or something people were accusing him of. But what somebody obviously briefs you, say, look, we've got like 50 different trials going on. One of them is effectively screening your blood, passing it through a sort of cleaner and putting it back, and it's effectively like you're sort of bleaching it out. And they'll throw a throwaway cut, and he's like said this, and then of course somebody died. I can't remember doing silly things, but he almost just tells you some of his briefings without meaning to. And clearly, I doubt very much whether they'd have wanted, apart from the obvious oil rights that were being withheld, that they had a legitimate grievance about, that they would have wanted front and centre, as you say, we're just doing this for oil and money, and because actually there's about 5 different reasons that they would reasonably have wanted to do this: to stop the flow of cocaine into North America, to moot the influence of other large global players in their backyard. And any one of them is a more legitimate reason than we just want them, because it's a nice corollary, nice to have, isn't it, for America? They've loads of oil in America, right? You could frack baby frack. There's a ton of it. They're not wanting for it. It's just a strategic play on the oil for them.
There was an excellent ex post over the weekend by a trader who posts a lot on commodities, and her theory was that oil was a narrative, essentially, that was convenient and easy
Yeah.
to understand, but it was actually that was basically a show. and that behind the scenes, it was that trifecta of, as you mentioned, the bad actors as far as the US geopolitical scene were concerned, trifecta of China, Iran, and Russia, all of whom had operational interests in Venezuela. This was, again, the Monroe Doctrine in full force and effect, in terms of the desire to strategically mute these actors in various ways, or neutralize them by taking this presence and removing the kind of common factor of Venezuela from the equation. Certainly, those actors did not step up in defense of Venezuela during the recent actions, and it's been, I think, very little has been said. But I'd love to take up that theory of how the drunk in the pub, so shooting from the hip with the latest.
Well, Donald Trump doesn't drink, of course, so he's just in a pub.
No, but sure. But how do you treat that drunk in the pub? How does one? I no longer drink, so I'm often maybe the sober, person at the table. But how do you tend to treat the drunk in the pub? You kind of go, you nod your head, you go, okay, great, yeah, sure, right. And I think that maybe that is the attitude we need to take. I mean, it's not just shooting from the hip about running Venezuela. There was another X post, as you said. I probably spent far too much time this weekend or this past week on X, with the map of Greenland with an American flag interposed on top of that. And that was posted by Katie Miller, the wife of Stephen Miller, who is, by some accounts, very close to the president. And this had then not only sparked some outrage online, but certainly well over 20 million views the time I last looked. But it has now sparked responses from the administrative head of Greenland, as well as the Danish prime minister. So
it's outrageous. I mean, they basically want to buy Greenland. That's what's going on here. It's not for sale last time I checked, but I don't doubt he'll bid them at some point.
But I think my point is really that these gestures, which maybe are they to be taken seriously? Are they provocative? Are they jokes? Are actually sparking quite serious responses. And I think this is, are we being trolled with some of this flooding of the zone? And but I think they're all sparking interesting conversations. The winners, I believe, in 2026 of this increased rhetoric will be most likely defense stocks.
Right. And the consultancy universe that goes around in Booz Allen, I forget who it is. Yeah. That's fascinating. So back to the US and what's driving that, because, it's been all the talk, and I know you've done a lot of work on AI, the Magnificent Seven, or Mag 7. He's even got abbreviated. It's so cool to talk about. But I mean, I'm almost yawned off about it, but there's still loads to go. And Tesla in particular, I think, is worth exploring. Because what I want to get to on the equity markets is, first of all, the jobs, which I go on about relentlessly, and there's updates yesterday we can talk about if you want or not. But the multiples that are being applied to different levels of growth, and are those multiples due for a correction? So notwithstanding the growth may or may not be coming, and they may or may not be supporting some of those stocks, are some of these, because of AI, going to even be there by your payback period? And this concept of terming out an investment, would anybody rationally pay £100 for something giving them £3 a year if they didn't think it was going to make it to the end? It's like a bad bond.
Exactly. Well, great question. And I suppose we've been kind of wrestling with this valuation point all year. I think just getting back to the Magnificent Seven, even though they have led the conversation, not only because of their dominance and representing 40% of the S&P, as well as their dominating headlines, certainly capital expenditure, and just the whole AI story, their actual performance over the year was somewhat lackluster in some cases. And probably you mentioned Tesla, and Tesla had a particularly volatile start to the year. It was, of course, tied to Elon Musk's role in government and Doge, and that was perhaps most accentuated around the aftermath of Liberation Day. So just looking at a stock chart of Tesla here, and it didn't really start to recover until September, October, and is just back to where it started the year, essentially. So not a particularly illustrious run, I'd say, for Tesla. The stocks that really did stand out were Alphabet, and we know that they are stealing a march on NVIDIA when it comes to their AI models, and NVIDIA itself. But if we take out Alphabet and NVIDIA from the Mag 7 chart, we've had a fairly lackluster plodding along, recovering of what they lost, but not a particularly strong year in absolute terms. And then just getting back to valuations, I suppose the key problem for extrapolating around now is that we do have solid earnings, just ongoing exceeding expectations coming out of the US. We know they have fat margins that have been defended. And that's really what differentiates the US from other countries around the world, is just that sheer robustness of
Mm.
the earnings picture.
It's the
And
world in a continent.
exactly. Yeah.
And I think the jobs is fundamental to it all. If you start seeing those come off, your soft, not even a landing, is it? But your sort of soft playthrough of that doesn't work. But whilst they hold up, that earnings robustness that you mentioned carries on. And so it's quite curious to see what it will be. It's not, we've assessed that it's not an esoteric political war-based shock. What is it that would cause some correction in that? And how long does it take the market to realise they're paying chronically over long-term rates for income?
Yeah. Well, we've got back to, we were talking about cognitive biases and how we're extrapolating causation and short term and long term effects. And I think the other problem is this kind of average. I had a guest on my podcast who described the average as a lie. And we do tend to focus on averages. And when we look at the average, say, earnings growth, the S&P, that the average earnings growth is supposed to be at 15%, and double digit for the third straight year in 2026. And the estimated earnings growth rate to be 15%, which is above the trading growth rate 10-year average of 8%.
Does
But if
that
you,
mean a median?
but that's the mean. And then if you break it down, the real estate, companies are languishing with a 5% earnings growth, whereas technology is, closer to 30% earnings growth. So this
Mm.
average of 15 is quite distorted and not representing necessarily the entire picture, very
And the
heavily
growth
weighted,
coming from it's large cap growth.
and particularly technology. And why? I mean, this is, of course, backward looking. We're seeing staggering growth numbers, which probably cannot be extrapolated in a straight line way into the future. And then similarly, the capex requirements will be significant. That will certainly start to eat away at
Well,
cash.
that takes us back to a topic we've discussed before, which is barrier to entry issues and why it's different this time kind of chats. So looking back to 2000, and you had myriad startups and non-revenue producing internet companies, many of which disappeared entirely, many of which went on to be those big names today. However, in AI, the capex is so vast to keep up and enhance their offering. And you've also got this sea change of people, perhaps I think, going from using Google to looking at their Grok or to whichever else they seem to chat GPT and so on, and others are available. So, and this led a war for being the new search engine, such that when you Google stuff now, the AI is the first answer. Its own meta one comes up at you. And so there's a sort of a behavioural adoption piece for those big ones that are already spending. And because it's concentration of seven, you don't sort of have this, oh God, what if they're overvalued in the way things were overvalued back in '00 that were just never going to fly. What do you think about that?
Yes,
Is it different this time?
so those classic words, what the four
Mm.
most dangerous words in the English language. I'd say a few things are different. Yes, these companies have solid balance sheets. They have, in case of Alphabet, but not the case of OpenAI, actually, a very solid existing business that can subsidize the spending on capex needed for their AI build out, and can also that it gives them that they have the ability to issue debt. There's always they're oversubscribed these offerings, and there is, I'd say, a very solid capital formation picture there for, say, for Alphabet. But what's not different is the tendency for market participants to buy the dream, to drink the Kool-Aid, and to kind of overestimate the impact of the growth will continue on the same trajectory, and underestimate the ability for customer behavior to reach saturation point. And you mentioned the switching between models. I do think that this switching is indicative of the exploratory and experimental stage, that there will be a choosing of a model that works for your needs, and your needs may not be the needs of a kind of a vibe coder that needs the fastest, most powerful model available to, say, somebody doing a biotechnology research. You may need for something very basic that has already been satisfied by the current model. So there will be, I believe, a discrimination by consumers in terms of
Mm.
what they need and what they don't need. And this will be a reckoning for many of the AI companies, because they will not I believe, see the same growth that they've seen up to now.
Well, I think that's almost inevitable because growth has to taper to something eventually once you saturate. But is it? I saw some narrative yesterday or this morning on a news feed about potentially the commoditization of that Mag 7 universe. What do you think about that?
That would accord exactly with what I've been thinking in terms of, have we reached saturation point? I've spoken about 2026 being the year of enough. A good friend of mine called Brian Portnoy, you would enjoy him. He's not afraid to speak his mind. He has a company called Shaping Wealth, and he speaks about or his book called Shaping Wealth, and his company speaks a lot about the idea of what are we seeking to achieve in our retirement, or is funded contentment, and that there's that concept of enough, that we're not always striving for more, that if you can actually be content with what we have, that is the goal, and being able to fund that is enough of a goal when it comes
As
to.
a human being, I would agree with that. But as a society and a planet, we never ever have enough.
Well,
It's Ferris Bueller's wisdom. You can never go too far.
that's an interesting topic. I mean, I think you were getting into the philosophical now, but I do believe on this enough point, we can at times say call time out perhaps on future development. We've already, I've mentioned before, the pushback around data center build outs and the price of energy. There will be time out, I believe, on the consumers' ready adoption of AI, because they will have reached either saturation point. They won't be. We've already seen this point with some of the AI videos and AI content, and even the discussion that influencer roles when it comes to marketing may be reaching some saturation point. So these are fascinating pointers to I think to note, is that how quickly do we change how we consume, who we listen to? Creator economy is getting a lot of attention today. Our big brands losing their way because they haven't got that. So all of these enough, I think affordability, mentioned at the very beginning. I mentioned that the oil price, the price of gas at the pump for US drivers. Has there been a point that they just elected a socialist, a democratic socialist mayor in New York City on the platform of affordability?
Who's just put the tube fares, the subway fares, up to $3, I believe, having promised to axe them to zero.
There,
It's a
there,
good
there you go.
start.
Yeah, but was it do as I do, not as I say, or listen to watch what I do, not what I say. And this will be a fascinating thing to watch in terms of also just whether there were some pictures of Mamdani recent, the mayor, going to rent control buildings and looking at the state of them. And arguably, the reason they're in this state is because with rent control, the owners have not been able to actually make the upgrades that would be required in any old building. So
Hmm.
you can't have it both ways. You can't have rent control and perhaps state of the art maintenance. So I
So the
think
failure of socialism, a bit of a theme with Venezuela's collapse and
it,
rent controls not working.
it's been popular. It's been, I mean, that's one of, certainly in the US, I did not perhaps take fully into account just the cultural backdrop to that push. And I first started to see it during the presidential election in 2024, when where we had Donald Trump and Kamala Harris running, and this Kamala, or the assessor, the socialist, the communist undertones. And it came up during the Bernie Sanders candidacy 4 years previously, but certainly I did not appreciate that cultural backdrop against socialism. And I think
It's
that's
a
what.
massive polarized society. Like it's not just in the US to a degree here. And basically the angst is from it is about the wealth gap. And it's not really an earnings Gini coefficient wealth gap. It's a wealth gap. And the problem is, to my eyes, I've discussed with you before, is governments just spending too much money, depreciating their currency, and making people hide out in assets that inflate. So the haves have more, and the have-nots literally can't get there because they're precluded. And as the need for more spending results in higher taxation, the likelihood of them escalating up that social scale diminishes further, amplifying the wealth effect, the wealth Gini coefficient. And until that's fixed, you'll just keep getting more and more angry people realizing that they're the victim of this. And frankly, the government just need to stop spending too much money, telling you just need more and more people to prop up what is effectively a Ponzi scheme. It is. And at some point, as a planet, and this is very philosophical, but actually real, there will be a maximum population on Earth. And at that point, you will not be able to grow any further, right? So working back from then, there has to be a reckoning before that point, or at that point, certainly. So why not get it out of the way and stop making everybody's lives harder? And just stop spending too much. That would be my answer to this.
Well, this is why I love conversations with you because you never, there are so many rich layers to what you just said. And I think a couple of things. One is we've spoken before about the lack of influence of geopolitics on markets. Does the K-shaped economy and the wealth gap and the rise of inequality, does that have an impact on markets? I showed a slide recently in the Markets Happy Hour podcast, which showed that the top 10% of earners in the US are responsible for 50% of spending. So
Okay.
clearly, the bottom 10% are not moving the needle when it comes to those earnings numbers that we mentioned before. Maybe they're downsizing into the dollar store, Dollar General, and they're not spending money at Chipotle because they can't afford a $15 salad bowl or burrito bowl. And I've never been able to justify that personally. So, I've always been surprised at the rise of that class of spending. But
Yeah.
so if they're not really moving spending, what is this going to mean? I think you and I
Mm.
both know that it drives populist politics. It can drive
Yes.
socialist politics. We've spoken about that. So that can then drive wealth flight, which we can see there's a lot, the wealth, say, whether it's exiting the UK or exiting New York and going to Miami. So there will be that. But does that really move the needle at the end of the day? It's hard to tell. But I think
Mm.
what does, the incontrovertible common factor that is associated with positive outcomes for every member of society is economic growth. And
Hmm.
I had this conversation down in Argentina in the summer. I was there in August before I suppose the affirmation of Javier Milei's policies in September. So there was quite a bit of concern at that point that he would not get that congressional affirmation and that it could be sidetracked or waylaid. And whereas some of these cuts, as you mentioned, were critical in Venezuela, what he also successively did was kind of a little mini doge down there in terms of cutting out middlemen, stripping away some layers of bureaucracy. And he was, of course, the original chainsaw man. So it was to see that the adoption of that, despite the fact that there had been some austerity resulting from it, it was seen as the essential must-have before growth could take place.
Yes.
Yeah,
I
and
mean,
growth
it's a
is the answer.
template. That's the template, right? And until it gets followed by major Western countries, we're just going to keep languishing like this, to my eye.
Well, growth is the answer, and that's why I'm so committed to the UK growth. Living
Yes.
here
Because
now,
ours has been stagnant for 20 years, really.
right, and I think some of that's due to perhaps the ecosystem is not conducive to encouraging venture capital. Certainly,
Mhm.
there have been more listings happening elsewhere. We've had the many pension funds forced into fixed income instruments. Some of that has been a regulatory requirement in order to shore up funding ratios. Pension funds have exited, foreign investors have exited the stock markets. The British stock market, the FTSE, has shrunk as a component of global markets. So all of these factors, but I don't think it's too late. I tend to be, I think, fundamentally at heart an optimist and believe that it's not too late to kickstart growth in the UK. I think we're on the right path with government policy and with some of the recognition of what needs to be done. And this goes back to one of your points about some of the green energy lobby. You mentioned reaching a point where we go X growth. The population can't grow anymore. It just reaches saturation point. If growth is sustainable, to use one of those buzzwords that were popular a few years ago along with DEI and ESG, sustainable growth, that is as part of it. And I do think that local investing in the UK is a form of sustainable growth because you may be sacrificing some return at the margin, but you are creating communities, building places, investing in agriculture. You're seeing biodiversity enhanced. You're building carbon neutral buildings. So this is sustainable growth. I'm very optimistic about that.
You have a conflation on the wealth thing, because of the population aging. So it's not just the growing population, the sort of sanguine growth generally, but I think David Willits mentioned it years ago in his The Pinch book. Remember the Tory MP, Two Brains Willits, he was called, and he wrote on this, and it was how the baby boomers, he said, have stolen our, future and how they should give it back and all this. But effectively, we're kind of at that point where baby boomers, bless them, are about to, reach the end of their time here, and it's going to pass. whether it drops a generation or drops two generations, and you've seen all the talk about inheritance planning and the second order effect, the government's recognizing this, trying to lick their lips. How can we get that? How can we get it? That's the wrong answer, right? Because that's needed lower down the young people without jobs and without prospects and without the chance of buying a house, frankly. And so to take that away as well would be the final sort of insult, as it were, of that generation that has enriched itself beyond any reasonable measure and sort of leaves everybody else to pay for it because they've geared it all up, of course. And I think that story is fundamental to understanding the spend and wealth inequalities, not just, and it's all linked, of course, not just the fact that if you do a day's labour, it doesn't seem to move the needle on getting you wealthy, as it were, because it's all stashed in these older um, demographics.
Well, you touched there on two topics that, again, the last two that I just brought up, and maybe it's a good place to just do kind of end my thoughts on the year. But 2 points you made is one, the baby boomers and how they had it. So nobody ever had it so good as the baby boomers. They,
Yeah.
that they earned more than their parents. They had a nice trajectory, stable jobs, built nice retirements, and are now sitting around these wonderful houses that they own, and they're doing better than their kids could ever hope to do. But yeah, on the other hand, they are downsizing, baby boomers. They're living longer perhaps than they thought they would. And they're downsizing. And that's actually opening up the real estate market for first-time home buyers who are, it's granted, older than they would have been in the past. They've waited longer to own a home. But because
Mhm.
they're waiting, that perfect point will synchronize that as baby boomers are selling, they'll be entering the market. And maybe if the new Fed chairman has his way, we'll be seeing lower rates in the US at that point. So the housing market isn't quite the basket case or disaster as we might have thought. And in fact, the baby boomers do have to go somewhere. And there's that kind of that is there. The second point, I think this is something I talked about again at the beginning of the year, is this new nihilism. And one of the other, as I said, far too many time on X rabbit holes over the Christmas period was this idea of, that it was in the Wall Street Journal that the current generation has essentially given up on traditional wealth creation. They have seen it's not possible. They're out of the housing ladder, and they are instead focusing on speculation and perhaps
Yeah.
gambling up, throwing it all on black, and hoping that they'll be the next unicorn founder. But that
Well,
they
you see this, don't you, with the Insta ready generation that make fortunes from a few, videos, whatever it is they do. And but you might also see, I've mentioned this to you before, that with the dawn of AI, you could see people without much experience or savvy being able to use the AI to do something that actually sells. Ask the AI, what is it that will sell? How do I do it? Can you do it for me? And they sit there just talking and ask the right question. You would have to be pretty bright. But the barrier to entry might actually, for many, be quite lower in that new world. And there's an interesting corollary point there on the meaning of brand in the next decade. Does that carry the same weight it does? Which takes us nicely back to Tesla, actually, because the cult following that it does have of investors who are Elon fans will but hang on his every word and read everything there is to say about it. But their story would be, okay, well, robo taxis. Everyone's going to want a robo taxi. They're going to take over the world. Well, of course, yeah, Tesla robo taxi or the competition that will inevitably follow. Which one wins and does it work, and are they the winner? They're big questions, and that's possibly why it's lagged some of the others. But all the other things it has, like the robots thing, everyone's going to have a robot. Well, will they? And if they do, are you going to be the one providing it? And I think that those two announcements, if they're right, they're going to make a fortune. If they're not, they're going to have a bloody nose. So it's a really interesting one to chat about because it ties all of this together. It's sort of a little microcosm of the economy.
Well, I think where our conversation started is where I come back to that. You said the mistake that when you look at your social media feed, you have it on all, read all. You don't look for tailored news, because tailored
Yes,
news
I
sends you
don't
down
look
the
too
rabbit
bad.
hole of the echo chamber, with confirmation biases that we already know, and that is exactly what I think this nihilism article revealed. Is it was profoundly depressing to think that all young people might think that way, to think that the rise of Polymarket and Kalshi and other betting vehicles and sports betting we know has increased dramatically is a sign
Yeah.
that people just have given it up. And usually, as you know, lottery ticket sales are higher in poorer neighborhoods because it's that when you've nothing to lose, that little bit of a gamble and so much to gain, you think about those odds quite differently. And the
Mm.
essentially we're saying that the current generation has nothing to lose. They are at this place of such degradation in terms of their financial outlook that they're just gambling it all.
So
And
what we need, Ethan, is hope. We need hope for the generation and for us. So what's getting you all excited and optimistic for the next year?
let's start with that article. The backlash to that article was like, well, my kids aren't like that, or I don't see that the only answer is betting on these casinos, buying getting into the gambling platforms. That I actually see that things are a little different is perspective. The answer is hope, but the answer is also perspective. What am I hopeful? I think, as you mentioned with AI, it can be empowering. I think these pushbacks around the ethical case for AI, the moral case, the social media ban in Australia, as well as the desire for AI to just slow down, the rise of
Mm.
awareness of the anxious generation, the effect of social media on our kids. We are not amoral as a society, and I think that is reassuring. There's no necessary formula for the moral code that dictates how quickly we accept change to our existence, but there is a code. And if we were to hope that we bend towards it over time, that gives me hope. And again, just back to that growth phenomenon, I think when things have to get sometimes to rock bottom in terms of perspective and outlook before something gets done. And I do think
Mm.
with the UK in particular, and probably the last budget was probably, I think, a rock bottom point. That was when we last spoke, was
It
right after
certainly
the last
was.
budget. I think since then it was seen as an anti-growth budget, and I think that
Yeah.
the cat calls were far and wide in terms of this has gone too far.
Hmm. Yeah. Well, thank you for your thoughts. And I guess we should wish everybody listening a very, very happy, fruitful, and successful 2026 and healthy, most important commodity of all. And a bit like you, I'm off to get some snow while there still is some. And hopefully we'll reconvene to chat over it again and see how that January's playing out.
Thank you, Ian. Fantastic conversation. I really enjoyed it.
Lovely to speak to you, Ethan. God bless. Thank you all. Bye.